and then we look at what's happening in the economy. So what we see happening in the economy, again, is most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%.
I believe inflation will continue to come down. I think we've got a good, strong economy. We've got very strong domestic demand. We're seeing a little bit more distress at the household level.
The price is wrong, Janet. Fake job reports are setting Donald Trump up for the worst economic pullback this country's ever seen. From the data we've now been released showing 2023 and 2024 have been fugazi, Jerome Powell is ready to unleash hell upon the American economy, and I'm going to show you how and why in today's episode. Welcome in to the Blockchain Basement. My name's The Druth. Let's dive into what the hell is going on as jobs numbers for 2024 and even 2023 are hitting revision levels we have never before seen. We're seeing major downward revisions to the United States jobs, and this is pushing the Fed to act. The Bureau of Labor and Statistics has acknowledged that the non-farm payroll estimates were above the level shown by tax records to the tune of 818,000 jobs. So rather than adding 2.9 million jobs in the 12-month time frame to March 2024, there were only 2.1 million new jobs added in that time frame. This means that the labor market momentum is being lost from a weaker position than originally thought. But wait, it gets worse. This just came out from the Philadelphia Fed, estimating an even weaker outlook on state payrolls. Let's have a look at what we're dealing with here. The Federal Reserve Bank of Philadelphia estimates that the U.S. state employment in the second quarter is significantly weaker than official figures from the U.S. Bureau of Labor and Statistics showing. The early estimates indicated lower employment figures in the 25 states, higher changes in the 2, and small changes in all others. But the Fed Bank takes state payrolls figures from the BLS and adjusts them using a more comprehensive yet less timely quarterly census of employment and wages data. In its preliminary estimate, of course, we just talked about the 818,000 jobs that they lied about, that were fake. But now it looks like it's going to get even worse. And by estimates, it looks like another 630,000 jobs were falsely added to the labor statistics for the United States, thus making Jerome Powell's movements idiotic and null and void. But we're kidding ourselves if we think that Jerome Powell didn't know he was dealing with false data all along. This is from Wall Street Maverick talking about these next 653,000 fake jobs revised away by government statisticians. They were faking the data during 23 and 2024 to try to boost Joe Biden and Kamala Harris. We all remember just a few months ago that Kamala Harris had, the U.S. economy's been great. Bidenomics is working. We all remember, we don't forget, Pepperidge Farm remembers, and we are bringing the facts. Now, the truth can be found in the pudding at the local food banks, folks. Seattle area food banks are seeing record demand. We also see record demand in the food bank of Iowa as these numbers continue to grow in 2024. And if you looked at the data behind the credit card defaults, the answers are obvious. The U.S. credit card defaults jumped to around $46 billion in the first 9 months of 2024. This is the highest since 2010, the housing crisis. Credit card defaults are now up over 50% year over year, and the seriously delinquent credit card loan balances have more than doubled over the last 2 years. The bottom income consumers were hit the hardest due to the years of elevated inflation and interest rates, but this would make you think, oh my gosh, they're coming to save the middle class. They're going to make it even easier for us to survive into 25, right? Wrong. They are not going to do that because it's about to get so much worse. From the Kobayashi letter also highlighting a completely frozen housing market. U.S. existing home sales are set to close 4.04 million in 2024, marking the worst year since 1995, even worse than the housing crisis. The sales are set to be even lower than the 2008 financial crisis. Something needs to give here, as you can see from the graph of single-family houses sold per year. Things are getting bad. Now, the Federal Reserve, they got more plans to cut interest rate, right? To bring those rates down for the average home buyer that's just trying to find a place to lay their head. Wrong. This is the FedWatch, the CMEgroup.com, showing that the larger market expects federal interest rates to remain the same by 88% currently, with 11.2% coming in thinking we're going to get another 25% base point cut. But here's why it doesn't happen so easily, folks, because the unrealized gains and losses losses on investment securities held by these banks are hitting levels far beyond the housing crisis of 2007 to 2008 and are actually reaching levels we've never really seen before in American history. And now where does this take you? To the strong potential of stagflation. The million-dollar question is if the labor market can hold up with tighter financial conditions into 2025. If not, we risk stagflation. And here is the overlayment of a chart I've been warning about for a year and a half. From the 1966 timeframe to the 1982 timeframe, where the interest rate on homes went up to the 15 and 18% percentile rate, we are following this path to ultimate pain, and the proof is in the pudding. If you look at the current mortgage rates sitting here hovering around 6.5%, but it can get much, much worse. This is highlighting that time frame where we went up to 18% interest rates on 30-year fixed mortgages in 1981. This mortgage rate increase is the result of this CPI data. They are intertwined. We are following the same path, and Donald Trump is being handed a burning pile of dumpster fire trash. Now, will he be able to dig America out from this financial crisis in 2025? That is yet to be seen, but Donald Trump has got a lot on his plate to work with. Hopefully Elon Musk and Vivek Ramaswamy can cut government spending enough to make a difference. With that being said, what's the call to action? How do we save ourselves? Well, we hammer into real estate. We take investments in the risk asset classes. I am in cryptocurrency. I feel like we're going to have another great bull market year in crypto and AI sectors in 2025. I'm taking all of that money and hammering into the real estate market. I'm also hammering into vehicles, guns, gold, silver, and guns. So with that being said, I love and appreciate all of you. Stay based and cognizant about this dire economic outlook for the United States. Major work is yet to be done, and we'll see if Donald Trump can pull off a miracle in 2025. Till next time, Drew's out.